Well, hello, hello. Happy Tuesday to you. It's so great to be here with you. And if you're joining me on the replay, happy replay day to you as well. It's always a treat to be live here with you. I'm excited to welcome you to today's live level of conversation.
Welcome to Level Up with Winnie Sun. Market updates. Award-winning financial pro. Get ready. I present to you Level Up with Winnie Sun.
Well, hello, friends. I'm Winnie Sun, your host, Forbes contributor, CNBC council member, and award-winning financial pro, here to keep on top of relevant, trending business news. But what makes our show so special and why I'm always delighted to be here with you is because you're part of today's discussion. So if you're joining me live, depending on, doesn't even matter which platform you're joining me on, let me know, number one, how your week's going, and of course, which and your name, maybe where you're joining me from and how you're feeling and anything else that's going on in your life. Would love to see and hear from you, and love to see what your shares are. But as you know, that's what makes today special. We're going to be sharing feedback through our audience feedback moments and our community moments here on the show, because we're going to start and talk about how the markets closed today. Now, you may have seen the activities in the financial markets the last few weeks were surprisingly relatively mild. We actually had some positive days on the financial markets, but it just sort of seemed to take a U-turn in the last couple of days. The Dow closed down almost 400 points here, down 399. Nasdaq down 20, and the S&P 500 also down 27. Now, you may have seen the news, and why did the market turn sour all of a sudden? Was it earnings and whatnot? Well, we've been experiencing corporate earnings for the last few weeks. It hasn't been this bad. The last couple of days, of course, there's been some uncertainty, and that comes in the form of geopolitical uncertainty, right? So we know that, unfortunately, House Speaker Nancy Pelosi has decided to visit Taiwan, which in a time where U.S. and China relationships are sort of very much fragile right now, it's not seen as a positive move by investors. So leading up to this, a lot of investors are a little bit worried about what this will mean for China and the United States relations, and therefore it's impacting the financial markets. Now, in other news, I wanted to also share with you what else has been dropping, not just the financial markets, but also things that you might be looking to purchase or not want to purchase. Because recently, both Walmart and Target announced that they're actually doing a lot of cleaning up in their stores. They're selling a lot of things and they're putting things on discount because of recessionary times. Many of us are feeling the sting on our budgets, and therefore spending mostly money on groceries and those necessary items, right? Needs versus wants. And because of that, a lot of retailers such as Walmart and Target are being forced to clear some of their shelves for things that people actually want to and will spend money on, those more inflation necessary items, and less so these discretionary purchases. So it's not just back to school, but also a lot of these stores are selling off things such as, there's those bigger items as furniture and TVs and electronics. So if you're in the market for that, you need something like that. Do you know right now you're seeing a lot of deals pop up around there? Now, another thing that they found here on the West Coast is like people are finding more things on inventory backlog. So we're seeing that as well. Now, in addition to buying and shopping and seeing weakness in stores, another area that we talked about of really paying attention to is, of course, layoffs. And so, yes, the job market has been pretty positive in the last 6 months, and therefore we're not truly in a recession. But what's this about layoffs? What are we hearing there, right? Well, first off, I want to say a quick hello to CrossX Fighter Joshua joining us from YouTube Live. Always a treat to see you, Joshua. And I want to say a big welcome to Vicky joining us on Facebook Live. Vicky, it's great to have you. And Sadiq, of course, joining us on YouTube Live. Also, it's great to see you. And so many of our friends on different platforms today. Thank you so much for being here. I see Brian as well. Hope you're having a great week. But let me know about this. I mean, are you concerned about layoffs. Do you feel like there's been rumblings in your industry or at your company? Because there's actually been on LinkedIn, if you're on LinkedIn often, I am actually, on the right hand side, they have this area of like trending stories. And there's one sort of ongoing story that I think has exceeded over 500,000 views as of today. And that is sort of a almost a compilation of different companies and the amount of people that they're laying off right now. The numbers actually are starting to get more and more. Now, some companies might be laying off just, a couple hundred people, 'cause some people like 9%, but we've actually seen some numbers in the 20% area as well. Now, typically we see this information sort of trickle down at the end of the year when companies really need to make their numbers. We're actually seeing a little bit sooner now. We're seeing a lot of this news during the summer. So I want to make sure that you had this on your radar. Now, Robinhood CEO announced today that they're going to be reducing their headcount by 23%. Now, as you know, Robinhood is sort of that like online do-it-yourself trading platform. So they're definitely being hit amongst many other companies. Another area that's struggling that was also announced on LinkedIn today was the topic of household debt. Now, maybe you're not completely concerned about layoffs, which is great, but maybe you are concerned about household debt. Now, what do I mean by that, right? Well, according to a report that we showed today, the New York Federal Reserve has said that U.S. household debt has surpassed the $16 trillion mark, which is actually the first time um, during the second quarter here in 2022. That means that we're seeing record levels of credit card balances increasing by $46 billion last quarter. So people are definitely using plastic and they're putting a lot of the charges on it. So now it's an increase of about 13%. So jumping to $100 billion. This is how much is on credit card debt. And of course, we just announced just a couple weeks ago about how the Fed just increased interest rates by another 0.75%, which meant that if you have credit card debt, if you haven't looked at the statement lately, you might want to do so because those payments are going higher because the interest rate also probably went higher as well. So unfortunately, that's what's happening. A big portion of American household debt here is in the form of mortgages. No surprise there, but also credit card debt, student loans make up a big portion of that too. So even though maybe we're not technically exactly for sure in a recession, I think you and I would agree that many people here in the United States and abroad, right, Vicky? I'm sure you've seen this where you are. I think we agree that although we're not quite in an official recession, we sure do feel like we are in recessionary periods, especially with sky high inflation. Yeah. So Sadiq is saying they went higher. That's right. Vicky is saying that's mind blowing numbers. It really is mind blowing numbers because, how much more can we keep at this pace where things keep getting more expensive, right? And then we have a lot of people at risk of losing their jobs here. And then companies are still trying to hire more people, and perhaps at some point that will slow down. I don't know, but I just want to make sure that this information is on your radar because I always think the best way to prepare yourself financially is to keep up on some of those signals that are coming out of the financial markets, business news, layoff news, hiring news, all this new technology, right? I know, City, you love new technology, but we got to talk about this because if we talk about it, we can prepare and we can make sure that we can look out for each other and ourselves. And with that, quick show today. Thank you so much, my friends, for watching and, of course, supporting our program. And do me a favor and take a moment to share our show. I want to say a special shout out. I saw Joshua, I saw Vicky, I saw many of you do that last week, and we really, really appreciate it. And as a reminder, you can find full episodes of Level Up with Winnie Sun on NASDAQ, the KBCW, Amazon Fire, and Roku. And of course, check out our brand new podcast, Yes Factor with Winnie Sun. Check it out on Apple Podcasts. That's where I go. And with that, please tune in and be well. And I can't wait to see you again tomorrow. I think we're going to come back with In the Loop tomorrow. Take care now.